Welcome to the deep dive. Today, we're digging into Okta's latest performance.
That's right. They're Q1 results for fiscal 26.
Exactly. We're trying to get a beat on where they stand and where they might be headed.
Yeah.
We've got their official earnings presentation from May 27th, 2025, and also the commentary they posted alongside it.
Good sources. Gives us a solid foundation.
Right. So our mission really is to cut through the numbers and the jargon,
Mm-hmm.
figure out Okta's financial health, what their big strategies are, and, what it all means for the wider identity management landscape.
Sounds like a plan. There's a lot here, from their kind of high-level mission down to the nitty-gritty financials.
Okay, let's jump right in.
The key is connecting those dots, seeing that bigger picture of their health and direction.
Absolutely. So maybe for listeners who aren't deep into Okta every day, who are they? What's their main thing?
Well, in simple terms, Okta's core mission is free everyone to safely use any technology. Think of them as like the gatekeepers, providing secure access, managing identities for all sorts of digital stuff.
Gotcha. And they're a big player.
Oh yeah, around 20,000 customers total. And what's interesting is nearly 5,000 of those customers spend over $100,000 a year with them.
Wow. Okay.
Yeah,
That's significant.
it is. And they also have this figure, $4.084 billion in remaining performance obligations, or RPO.
RPO. Okay, that sounds important. Can you break that down quickly? What does that really signal for their future?
Yeah, sure. Think of RPO as their contracted backlog.
Okay.
It's the total value of services they've already signed contracts with but haven't delivered or invoiced yet. So that $4 billion plus gives them pretty good visibility into future revenue streams.
Right, visibility. That makes sense. So they've got this pipeline. What about their growth rate right now? How's that looking?
They're projecting a pretty solid 15% compound annual growth rate, that's EHR, looking back from fiscal 23 through their current estimate for fiscal 26.
15%.
Yeah. For fiscal 26, they're aiming for somewhere between $2.850 and $2.860 billion in revenue. So definitely consistent upward movement.
And looking at this current fiscal year, FY26, what are they really laser focused on? Looks like a few key priorities.
Yes, exactly. Their strategy seems to boil down to three main pillars for FY26.
Okay.
First, elevate industry security with something they call OSIC, the Okta Secure Identity Commitment.
Perfect. Right.
Second, really win over the IT and security teams with the core Okta platform. And third, win the developers using their auth product.
OSIC. That sounds kind of broad. What's the core idea behind that commitment?
Well, the Okta Secure Identity Commitment, OSIC, it's basically about lifting the security posture of the whole identity ecosystem.
Okay.
It means improving their own product security, hardening their infrastructure, making it tougher, and also actively guiding customers on best practices. It's like trying to raise the security tide for everyone involved.
So it's not just about their bottom line, but being a security leader overall. Interesting angle. How are customers actually, using Okta day to day?
Oh, it's pretty varied.
Yeah.
Their solutions get used for securing standard apps, obviously, but also newer things like AI agents.
Right. AI agents, that's becoming huge.
Definitely. They also handle identity orchestration, making different systems talk to each other, securely managing access for employees, and increasingly for non-human identities.
Non-human identities, like bots and systems.
Exactly. Automated systems, service accounts, that kind of thing. Plus, managing access for B2B customers and partners, too.
That non-human identity piece. You're right, with automation booming, that's got to be a critical area moving forward.
For sure.
What about the different types of users within a company? Are they tailoring things?
Absolutely. They've really built the platform with two key groups in mind. For developers, it's about extensibility, making it easy to integrate, customize user journeys using Author. And for the IT and security folks, it's about providing that robust, standards-first security foundation. Reliability, compliance, that sort of thing.
And it seems they have some outside validation for this. They mentioned Gartner Magic Quadrant recognition.
Yeah, quite consistently. They were named a leader in the Gartner Magic Quadrant for Access Management, again, in 2024. That makes it 8 years in a row.
8 years.
That kind of consistent recognition from a major analyst firm like Gartner definitely speaks volumes about their market position and their product strength.
Okay, digging a bit more into their security approach itself.
Right.
What's the philosophy there?
It's really about comprehensive protection, covering the user before they even log in, during the authentication process, and even after their session ends. It's a layered defense.
There's a fascinating stat in here comparing MFA adoption between Okta admins and Microsoft admins.
That one definitely jumps out, doesn't it? Okta says over 90% of their own admins were using multi-factor authentication before it was even required.
90% voluntarily.
Right. Compared to Microsoft, where the number was apparently around 34% before they made it mandatory.
Wow.
It's a pretty stark difference. It suggests maybe Okta's MFA is easier to set up, or maybe they've just fostered a stronger security culture among their admin users.
That is a compelling data point. And they also mentioned being a 6-time Gartner Peer Insights Customer's Choice. What's that one about?
The Peer Insights Award. That one's different because it's based purely on feedback from actual end users. So winning that multiple times suggests customers are generally pretty happy with the product, the support, how it all works in practice. High satisfaction levels.
And it looks like Okta offers more than just the basic login security, right? They talk about integrations.
Exactly. Their secure identity integrations, or SII, go beyond just single sign-on and MFA.
Like what?
Things like provisioning, automatically setting up user accounts, entitlements, managing what users can access, automation workflows for identity tasks, and even universal logout, ensuring users are logged out everywhere properly.
So joining up all the different pieces.
Right. It's about creating a more connected and seamless security environment.
And the last point in this overview section, they make a direct comparison on reliability versus Microsoft.
Yes, and the numbers they present are, well, quite eye-opening.
What do they say?
Between 2021 and 2024, Okta claims they had only 69 minutes of total downtime.
69 minutes over 3 years.
Compared to, they say, over 2,100 minutes for Microsoft in that same period. They even call out specific Microsoft Entra ID outages in early 2025. It really hammers home how critical uptime is when you're the gatekeeper for everything else.
Okay, that's a really thorough overview of Okta's mission, strategy, and positioning. Now let's get into the numbers. How did they actually do in Q1 of fiscal 26? What are the financial highlights?
Okay, Q1 financials. Overall, it looks like continued growth. Total revenue hit $688 million.
$688 million.
Yeah, that's up 12% compared to the same quarter last year. And that growth was overwhelmingly driven by subscription revenue, which was also up 12%.
And subscriptions are most of their business.
Almost all of it. Subscriptions make up 98% of their total revenue now. That high percentage is generally seen as positive, indicating predictable, recurring business.
Makes sense. What about outside the U.S.? How's international growth?
International revenue grew 8%. It now represents 20% of their total revenue.
Okay, so still room to grow there, but it is growing.
Exactly, making inroads globally.
We talked about RPO earlier, that backlog. How did that metric perform in Q1?
RPOs saw really strong growth, actually, up 21% year over year, reaching $4.084 billion.
$4 billion. Wow.
Yeah, and remember, that's future contracted revenue. Their average contract length is about 2.5 years, so that provides a solid runway.
And the portion due soon?
Right. The current RPO or CRPO, that's the bit expected to be recognized as revenue in the next 12 months, that grew 14% to $2.227 billion.
Okay. What about keeping existing customers and getting them to spend more? How's their net retention rate, NRR?
Their NRR for the trailing 12 months came in at 106%.
So over 100%, which is good.
Generally, yes. It means the average existing customer is spending 6% more than they did the year before, even after accounting for churn.
Right.
But they do note that, the broader economic climate has put some recent pressure on that NRR figure. So it's good, but maybe not quite as high as it has been.
Got it. Let's switch to profitability. What did the non-GAAP numbers show? And maybe just a quick reminder for listeners about non-GAAP.
Sure. Non-GAAP figures typically exclude certain expenses like stock-based compensation, acquisition costs, things like that. The idea is to give a clearer view of the underlying, ongoing operational performance.
Right. So how did Okta look on that basis?
Actually, better than they expected. Their non-GAAP profitability beat their own guidance.
Why was that?
Two main reasons. Revenue came in a bit higher than forecast, and they continued to manage their spending effectively.
Okay.
Their non-GAAP operating profit margin was 27%. That's a nice jump from 22% in Q1 last year.
That's a significant improvement.
It is. And their total operating expenses only went up 4% year over year to $504 million. That's pretty controlled spending for a company still growing revenue at 12%.
And headcount. How many people work there now?
At the end of Q1, they had approximately 5,750 employees.
Okay. Cash flow, always a crucial indicator. How much cash did they generate?
Very strong quarter for cash flow. They generated $238 million in free cash flow.
$238 million.
That translates to a free cash flow margin of 35%. That's quite healthy.
Mm-hmm.
They did mention that number includes about a $9 million hit from some organizational restructuring they did. But even so, it was better than expected, driven by that improved profitability and also strong collections, meaning customers paid their bills promptly.
And overall financial stability, how's the balance sheet looking? Any debt concerns?
Balance sheet looks pretty solid. They're sitting on $2.725 billion in cash, cash equivalents, and short-term investments.
Okay.
They do have some convertible debt outstanding, about $510 million due in September 2025, and another $350 million due in 2026.
So almost $1 billion in debt.
Yes, but when you net that against their cash pile, they still have a net cash position of $1.865 billion.
Right.
And importantly, they explicitly state they plan to pay off those 2025 notes when they mature in September using their existing cash. So no immediate refinancing worries there.
Good to know. Let's swing back to customers. Did they add many new ones, especially those high-value accounts?
Yes, they did. In Q1, they added 70 new customers spending over $100,000 in annual contract value, or ACV.
70 new ones in that bracket.
Right. And ACV, just for clarity, is that annualized value of their customer contracts. Their total number of these $100 K plus customers grew 7% to 4,870.
And that group drives most of the revenue.
Over 80% of their total ACV comes from that $100 K plus cohort. So yes, very important.
Any movement in the really big spenders, $1 million accounts?
Yeah, that's another strong point. Customers spending over $1 million a year grew by 20%.
20% growth there.
Yep. They now have 480 of those customers, and that group alone represents over $1 billion in total ACV for Okta. That really underlines their success in the enterprise market.
It's always helpful to hear concrete examples. Did they share any specific customer wins or upsells from the quarter?
They did highlight a few interesting ones, yeah.
Like what?
Okay, so for new customers using Auth, there was a Global 2000 energy company modernizing their whole identity setup. They apparently chose Auth for its flexibility and vendor neutrality.
Interesting. Any new workforce identity deals?
Yes, a U.S. government entity signed up for the core workforce platform, SSO, MFA, lifecycle management, workflows. They were replacing old manual processes and apparently a system that just wasn't working.
Okay.
There was also a European telecom company that bought both Workforce and Auth to unify their identity strategy, tackling problems with fragmented systems.
So cross-selling the platforms.
Exactly. And on the upsell front, a U.S. grocery chain added Okta's Privilege Access Management, OPA, to better secure sensitive accounts.
Okay, PAM is a hot area.
Definitely. And finally, a big Global 2000 insurance company, already using Okta for customer identity, added their identity governance product, OIG. They liked how easy it was to implement.
So it sounds like good traction across different industries, different products, both landing new customers and expanding existing ones.
That seems to be the story, yes.
They also mentioned showcase highlights from early April. What was the focus there?
Ah, yes, the showcase event. That seemed really geared towards future trends. They specifically highlighted solutions for non-human identities, those bots and service accounts we talked about.
Right.
And also how Okta can procure the increasing number of AI agents businesses are starting to use.
So looking ahead, positioning for what's next.
Exactly, showing they're thinking about the evolving security challenges.
Okay, that covers the past quarter pretty well. Let's shift focus to the future. What are they telling us about Q2 and the rest of fiscal year 2026? What's the outlook?
They're framing their guidance as prudent, taking into account some internal go-to-market changes they're making, plus the general economic uncertainty out there.
Okay, cautious optimism.
Something like that.
Yeah.
So for Q2, ending July 31st, 2025, they expect total revenue between $710 million and $712 million.
Which is growth-wise.
That represents about 10% year-over-year growth.
Okay.
For current RPO, they're guiding $2.2 billion to $2.205 billion, so 10% to 11% growth there.
And profitability for Q2.
Non-GAAP operating income projected at $183 million to $185 million. That gives an operating margin of around 26%.
Still strong margin.
Yep. And non-GAAP net income per share is expected to be $83 to $0.84. They also forecast a free cash flow margin of about 19% for the second quarter.
Okay, that's Q2. What about the outlook for the full fiscal year 26?
For the full year, they're actually reaffirming their previous revenue guidance.
Oh, okay. Which was?
$2.850 to $2.867 billion. That's 9% to 10% growth for the full year.
So holding steady on the top line forecast.
Right. But they have raised their outlook for profitability and cash flow.
Ah, interesting. How so?
They've boosted their non-GAAP operating income forecast to between $710 million and $720 million. That implies a 25% operating margin for the full year, which is higher than they previously guided.
Better efficiency kicking in.
Seems like it. They also raised the non-GAAP earnings per share outlook to $3.23 to $3.28 for the year.
Okay.
And finally, they bumped up their full-year free cash flow margin forecast as well, now expecting approximately 27%.
So maintaining revenue growth expectations, but improving the bottom line and cash generation forecasts. That usually plays well.
Generally, yes. It suggests confidence in their operational efficiency and cost management. They do note these forecasts assume a 26% non-GAAP tax rate.
Right. Now, they also included some details on how they calculate their total addressable market, or TAM. Can you briefly touch on their methodology there?
Sure. They break it down into three main buckets. For workforce identity and IGA identity governance, they look at U.S. businesses over 250 employees, estimate adoption potential for their products, get a domestic number around $21 billion, and then just double it for international.
Bit rough, but okay.
Yeah. For PAM privileged access management, it's based on internal estimates, looking at how much companies spend on modern infrastructure access compared to total cloud spend, using Gartner data as a reference.
Right.
And for customer identity, the TAM estimate is huge, around $30 billion. That one's based on basically the vast number of potential users worldwide. They literally mentioned Facebook users and service employees globally times assumptions about app usage and pricing.
So big numbers across the board, painting a picture of a massive potential market.
Definitely. They see a very large runway ahead.
The last bit in the materials is the GAAP to non-GAAP reconciliation. Why do companies like Okta always include this?
It's all about transparency, really, especially for investors and analysts. It shows you exactly what they're adjusting out to get from the standard accounting numbers to their preferred non-GAAP metrics. Things like stock-based compensation, which is often a huge number for tech firms, acquisition costs, restructuring charges, amortization.
Stuff that might not reflect the core day-to-day business performance.
Exactly. So they lay out the math, showing the bridge from GAAP to non-GAAP for operating income, net income, etc. It helps people understand how management views the core operational results. They also define their non-GAAP metrics, like free cash flow and that NRR figure we discussed.
And the Q1 numbers show that stock comp is a big adjustment.
Oh, yeah. The reconciliation makes it very clear that stock-based compensation is a major difference between their GAAP loss and their non-GAAP profit.
Okay, so bringing this all together, after digging through Okta's Q1 FY26 results and their outlook, what are the main takeaways? What should you remember from this deep dive?
I'd say the key points are, 1, Okta is showing continued solid revenue growth, especially from subscriptions and larger customers. That $1 plus customer growth was particularly strong.
Right.
2, their profitability and cash flow improved more than expected, and they've raised their outlook there, indicating good financial discipline. And 3, strategically, their focus on security leadership with OSIC, winning IT and security teams, and courting developers with OSIC seems to be the right path, positioning them well in that huge TAM they outlined.
Makes sense. So let's end with a provocative thought for you, the listener, to mull over.
Okay.
We heard Okta highlighting non-human identities and securing AI agents. Considering how fast those areas are evolving, how does identity management itself need to change? What new challenges and maybe what new opportunities does this create? Not just for Okta, but for any organization trying to navigate this increasingly complex, automated, and AI-driven landscape.
It's a great question. The definition of identity is definitely expanding.
It really is something to definitely keep an eye on. Well, thanks for joining me for this deep dive.
My pleasure.